Happy New Year, everyone. I hope you had a wonderful Christmas time and that you were able to enjoy some time off with your friends and family. Today I want to take a look back at 2022, which has been an extremely difficult year when it comes to investing. This time, instead of creating a separate monthly update, I figured it would make more sense to show you both my returns for the entire last year as well as December in one video. Let's also review the predictions I made to see if I got anything right or if I was completely off. And as always, I'll cover all important updates in peer-to-peer lending as well as stocks, which I like to cover via ETFs. Before we jump right into it, don't forget to subscribe for more videos specifically for European investors. And if you'd like to support me and check out anything that I mentioned in the video, you can find all the links down below in the description, some of which include sign-up bonuses of some sort. Also, please don't forget that none of this is investment advice, just my personal opinion based on my own experience as an investor. So let's begin with exchange traded funds, aka ETFs, my favorite way of investing into stocks since 2017. Over the past 6 years, my ETF portfolio, which I share with my wife, has grown to over 183,000 euros in value. Our strategy hasn't changed. Throughout the entire last year, we only bought a single ETF on a regular basis, the accumulating Vanguard FTSE World, enabling us to invest into over 3,700 stocks from all over the world. Let's take a look at my unqualified prediction from a year ago. Even though my ETFs are currently down close to 6% already in 2022, I still think they'll end the year with positive returns overall. But I don't think this year will be nearly as bullish as 2021. So I'm expecting a yearly return of 5% from my ETFs in 2022. Well, as you probably know by now, 2022 got a lot worse for stocks, making it extremely hard not to see negative returns for the year unless you got lucky with specific picks or sectors. I mean, just look at how far these stocks, some of which have been very popular throughout 2020 and 2021, have gone down since their peak. Peloton is down 95%, Zoom is down 89%, and Tesla, a big favorite of many influential finance YouTubers, minus 72%, and Netflix dropped 59% from its peak. Or how about we take a look at Katie Wood's very popular ARK Innovation ETF, which many of you asked me about over the past couple of years. Well, I hope you didn't buy that either. It dropped over 80% from its peak and 67% last year alone. It's now back all the way to its August 2017 level. Luckily, I never bet on single stocks or sectors. I prefer passively investing into the market long-term via ETFs. That way I never put myself into the position where I constantly question whether or not I made the right decision or when it's the right time to buy or sell shares of a specific company. But because of everything that happened in 2022, I was still far off with my prediction. After a pretty weak December, our main ETF was down 13% for the year. But let's take a closer look at the numbers according to portfolio performance. Here you can see that we started last year with an ETF portfolio value of 155,000 euros and ended it with over 178,000 euros. So far, so good. But what you can also see is that we added a lot of money, over 46,000 euros, more than any single year before. A good chunk of this amount came from the 13,500 euros we got back from our old apartment, some profits I realized from crypto holdings at the end of 2021, and our cash reserves, which we reduced a bit after seeing the market drop. If the market hadn't dropped, our ETF portfolio might have crossed the 200,000 euro line, but I'm sure we'll get there soon enough. We also received over 1,800 euros in dividends, more than any year before, from our distributing ETF shares of the X-Trackers MSCI World, which we purchased from 2017 to 2018, and the Vanguard FTSE World, which we bought until the end of 2020, before making the switch to the accumulating version of the same ETF. And when looking at our yearly ETF returns more closely, we can see that we've had exceptional returns in the 3 years before 2022. 29% in 2021, 5.3% in 2020, and 31.7% in 2019. So we had to see a negative year again at some point, which is exactly what happened. Our positions are still up over 22,500 euros, including dividends, since 2017. So we certainly can't complain. And since we're investing for the long run, I actually don't mind that the market dropped a bit. Remember, ETFs are long-term investments. You should have a time horizon of at least 5 years, ideally 10 years or more. So when the market crashes, that simply means we get to buy the best stocks from all across the world at a discount. Either way, we'll keep buying the accumulating Vanguard FTSE World ETF on a monthly basis, no matter which direction the market moves in the short term. Speaking of that, if you're looking for the best low-cost broker to buy stocks or ETFs in Europe, I recommend checking out Interactive Brokers, linked down below in the description. Alright, let's get to my investments in peer-to-peer lending. We'll start with taking a look at my returns for last month and specific platform updates, and then we'll take a look at my prediction from a year ago and see what the actual returns were for the full year of 2022. In December, I earned a total of 328 euros and 70 cents from peer-to-peer lending, my second best month so far. My best performers were Lendermarket, followed by Income Marketplace and Esketit. As you can see, I decided to pause Lendermarket for the time being. Even though Lendermarket has become my best performing platform over the past 3 years, here's why I put my investments on hold here for now. Personally, I've always only been interested in loans from one group of lending companies on Lendermarket, CreditStar. That's because CreditStar has been profitable for over 8 years in a row now, and they publish audited financial statements, which make me confident in my investments into their loans and them upholding the buyback guarantee. And apart from the fact that CreditStar has been extending more and more short-term loans on Lendermarket, which is why I currently have so many late loans in my account, they've been paying interest consistently. So from an investor's perspective, I don't have much to complain about. However, they haven't fully repaid all pending payments to other investors on Mintos as they had promised to do by the end of 2022. Instead, they came to a new agreement to repay all of them until May 2023. As I told you before, I don't like their treatment of Mintos investors as second-class citizens, and I was hoping this would be resolved in 2022. But since that didn't happen, instead of increasing my Lendermarket account as I had originally planned, I decided to stop my auto invest for now. I'll only restart it once the situation changes. Speaking of Mintos, I'm a bit disappointed that the platform doesn't have more leverage to get lending companies to cover their debts on time. Just like CreditStar, ID Finance also got an extension on its pending payments, this time until July 2023. That being said, I still remain positive regarding the platform and I'm planning on increasing my investments here this year. But hopefully this year will be a lot better as far as recoveries and pending payments are concerned. I'll keep you updated on that. Next, we have Viainvest, which kept performing well for me throughout 2022. Nonetheless, the transition to asset-backed securities after it became regulated has not been an easy ride, and the split between loans and securities in the overview continues to be confusing for new investors. Still, the amount I have in older loans and credit lines continues to decrease on a monthly basis as those are being paid back, so I might not need the invested in loans view anymore at some point in 2023. On a more positive note, I've had zero issues on Viainvest after over 3 years as an investor, and the platform requires zero maintenance from my side. Also, withholding taxes on interest payments have now been reduced to 5%, which is great to see. Meanwhile, Robocash also performed very well throughout 2022. I didn't have a single issue with any of my loans. Sadly, the platform decreased its interest rates again a bit, probably due to the high investor demand for its loans by the Robocash group, which keeps posting exceptionally strong financial results. Because of that, I had to lower the minimum interest rates to 11% for my auto invests, which is an interest rate that I'm still okay with. Next up, we have Esketit, which has quickly become one of my favorite platforms in the peer-to-peer lending space. That's also why I deposited an additional 500 euros to my account in mid-December. Last month was my best so far with over 49 euros in earnings. One thing you should know is that Esketit changed its bank details last month after the FCMC in Latvia announced its suspension of the Baltic International Bank due to its weak financial position. So make sure to double check you're wiring money to the correct bank account when making deposits to Esketit. As for Income Marketplace, I had my best month so far in December. I resumed my auto invest after seeing that the marketplace is slowly recovering funds from the suspended lending company ClickCash in Brazil, including interest, which I'm happy to see. And lastly, my latest addition Lande, where I invest into loans secured by assets like land, machinery, grain or livestock, also performed well in December as I saw my first interest payments. Okay, now that we went over my peer-to-peer lending platforms individually, let's have a look at my prediction from a year ago and compare that with the actual results. Meanwhile, I'm expecting more stable returns from my investments in peer-to-peer lending, ideally somewhere close to 10%. Sure, I could aim for even higher returns by going all in on the lending companies and loans offering the highest interest rate, but that also means taking on a lot more and more concentrated risk. I prefer spreading my risk by diversifying my investments in peer-to-peer lending over what I consider to be the best platforms, as well as lending companies based on their track record and financial statements. I still stand by what I said regarding not simply choosing investments based on the highest interest rate alone. As for my actual results from P2P, let's have a look. I ended the year with an internal rate of return of 8.89% for 2022, so about 1% below my expectation. Then again, my returns were definitely dragged down by some of the funds that are still stuck and generating very little interest on Crowdester and my funds in recovery on Mintos, which will hopefully be resolved soon. When taking a closer look, I earned a total of 2,922 euros, so an average of 243 euros per month from peer-to-peer lending in 2022. Overall, including the deposits I made, my P2P portfolio grew by over 8,500 euros last year to a total of 37,420 euros. I'm happy with close to 9% in returns in an extremely difficult year for investors, especially when looking at how poorly stocks or even low-risk assets like bonds have performed over the past 12 months. Okay, let's finish things off with the 10% of my portfolio I have in highly speculative investments in crypto, namely Bitcoin and Ethereum. Let's look at my predictions from a year ago, which couldn't have been further off. As for crypto, it's a sector that's very hard to predict. I think a lot of it is also going to depend on how the stock market does and if investors are more risk on or risk off this year. If the stock market gets back to its all-time high in 2022, which I do expect, then I think there's a very good chance that we'll see new all-time highs in Bitcoin and Ethereum as well. So my prediction for this speculative part of my portfolio is that we'll see 50% returns from start to finish of the year. Once again, with plenty of price movements in either direction. In my defense, at least I did say that the performance was going to be influenced by the stock market, which ended up crashing, and investors clearly took risk off the table last year. Still, to say crypto was disappointing in 2022 would be a massive understatement. I actually don't think it could have gone any worse. Bitcoin dropped 63% in value and Ethereum dropped 66% in value last year. So yeah, that was definitely painful. I'm grateful that we have what I consider to be a diversified investment portfolio with the majority in ETFs, followed by peer-to-peer lending and only a small speculative allocation to crypto, which doesn't exceed 10%. Last but not least, there's actually one investment of ours that was certainly a lot more time consuming and less passive than the others, but far outperformed everything else in 2022 and paid massive dividends. It started with a deposit of mine in January and then grew consistently month by month. I'm of course talking about my baby girl, which was born last October. Within only 2.5 months, she increased 80% in weight and 28% in size. She even pays regular dividends several times per day in the form of cute smiles and full diapers. You just can't beat those returns. Okay, all jokes aside, 2022 was probably the hardest year for investments that I've experienced in my 6 years as an investor so far. But this is part of the journey, so don't get discouraged if your portfolio is currently in the red. Things will get better again. Still, I'd love to know how your investments performed last year in the comments below. What was your best and worst investment? Also, before I take off, don't forget to subscribe for more European finance videos, and if you'd like to support me and check out anything that I mentioned in the video, you can find all the links down in the description below. Thank you guys so much for watching, and until next time.